So Microsoft reported their earnings last night. They beat on the top and bottom lines as Azure cloud growth was stronger than expected. During the quarter, the software maker also acquired video game publisher Activision Blizzard's its largest deal ever. So this is the monthly chart, and for the month ending in January, price is up roughly $25. This was a nice level to go long above the 185. Would have been a nice breakout. So you had back in November, this is green extended range candle, had a basing candle that was just buyers and sellers putting in their positions before the next leg higher. All right, so if you missed the breakout, I'm looking at that level or that zone as a monthly buyer's level. At 370. Now, before we continue with the analysis, let's look at the earnings called and detailed. So Microsoft shares moved as much as 2% lower in extended trading Tuesday after the software maker issued fiscal second quarter results that outdid analyst estimates and a light quarterly revenue outlook. Light quarterly outlook, that's forward guidance, and that was less than stellar. Microsoft called for fiscal third quarter revenue between 60 and 61 billion. They came in at the middle of that range. Company sees lower than expected cost of revenue and operating expenses during the quarter based on consensus among analysts polled by Street Account. Microsoft's revenue increased 17.6% year over year in the quarter, which ended on December 31st, according to a statement. The company's intelligent cloud segment produced roughly 26 billion in revenue, up 20% and above the 25.69 billion consensus among analysts surveyed by, again, Street Account. Now, within that segment, revenue from Azure and other cloud services grew 30%. Analysts polled by CNBC had expected 27.7% growth, and the Street Account consensus was 27.5%. The metric for the previous quarter was 29%. So they beat estimates on growth for their cloud segment. Now, like many tech companies, Microsoft we'll get to that lower. So Microsoft now has 53,000 Azure AI customers, and 1/3 of them are new to Azure in the past year, CEO Nadella said. The number of commitments to spend in excess of $1 billion on Azure overall increased during the quarter. Now, during the quarter, Microsoft closed its acquisition of the video game publisher Activision Blizzard, its largest deal ever. Here's what I wanted to get to. Like many tech companies, Microsoft was one of the first to start laying off employees. Again, layoffs continued. Microsoft's LinkedIn subsidiary cut around 700 jobs in October on top of the 10,000 announced earlier in the year. Last week, Microsoft said it's eliminating around 1,900 employees in its gaming unit, or about 9% of headcount, following the Activision deal. Again, all signs pointing to a recession, job cuts, which is why we're going to see Powell lower interest rates this year. All right, now getting back to the charts. Again, this is that monthly level that we discussed. You had a surge in price, gap higher, gap higher, gap higher. So you had 1, 2, 3 gaps on the weekly chart. So rightfully so, price is pulling back on the news. Question is, where can you get long? I like this area, anywhere between, say, 360 and, say, 390. Can we fine-tune that level? No, I can't. um, you had a lot of sideways price action, and then the leg higher, breaching eventually the what was previously all-time highs. Um, yeah, I would say in the 380 to 390 area, but if price declines is slow, you want to look for confirmation that price is going to go higher, either through volume, a bullish reversal pattern. Um, but right now, let Microsoft cool off. Ideally, you want to see price decline $20, and you might get that. You might get that this afternoon after Powell finished talking. But this dip this afternoon might be quick, so you have to be quick on the trigger if you do want to get into Microsoft. Thanks for watching. Subscribe. Please like the video.